Good morning, and welcome to the week ahead. It is 9:45 a.m. on Monday, March 9th. If you thought last week was rough, grab your coffee. It's going to be a war premium Monday. The Australian market is bracing for a volatile open. Over the weekend, the geopolitical landscape shifted dramatically as the de facto blockade of the Strait of Hormuz sent global energy markets into a tailspin. Brent crude has surged over 8% to $92.69 a barrel, its highest level in nearly 2 years. The SPI futures are currently pointing to a 1.2% drop at the open, which would see the ASX 200 test the critical 8,750 support level. This morning, it's a clear flight to safety, as gold pushes past $5,150. But the real story is the dual threat facing our local heavyweights. We need to address the materials meltdown that began Friday and is expected to accelerate this morning. Reports that China's state-backed buyer, CMRG, has instructed traders to avoid new BHP and Rio Tinto cargoes have fundamentally altered the sector outlook. BHP closed Friday down 4.2% at $52.81. With iron ore struggling to hold the $100 psychological floor, analysts are watching for a break toward $51 this morning. The cost crunch. Unlike previous oil spikes, our miners aren't catching a bid. They are facing a double squeeze, falling demand from Chinese mills and skyrocketing diesel input costs for their Tier 1 operations. Fortescue. Also in the crosshairs, expected to open down 2.5% as the China chill deepens. Beyond the headlines, the macro narrative has turned hawkish. The IMF's warning over the weekend regarding Australia's sticky inflation, now projected at 4.1% versus the US at 2.8%, has put the RBA firmly back in the spotlight. The energy spike we're seeing this morning is an inflationary fire the RBA cannot ignore. CBA economists have officially upgraded their outlook for the March 17 meeting to a lively debate, with the probability of a 25 basis point hike now sitting at 35%. The higher for longer theme isn't just a risk anymore, it's the base case for the June quarter. As we head toward the $10 a.m. bell, here is your opening strategy. Energy as a hedge, Woodside, WDS, and Santos, STO, are likely to be your only green performers. If the blockade holds, look for WDS to test 32 series. Tech Resilience, WiseTech, WTC, and NextDC NXT showed incredible strength on Friday, up 4.5%. Watch if they can remain decoupled from the resource-led sell-off. The floor. We must see the index hold 8,750. A close below this level would open the door for a retreat to the 200-day moving average at 8,650. The countdown to 10 a.m. is on. It's energy versus materials in a battle for the ASX 200. Grab your coffee and keep your platforms open. I'll be back on the other side of the opening bell to see who survives the first hour of trade. See you in a few. Stay sharp, stay safe.